I was saying the market had 2 days to make a decision. I was explaining the reasoning why, how bearish the different setups across the board that were showing, and how bearish the momentum began to be in the NASDAQ and in the Russell 2000. So in today's video, we're going to basically go over what the next steps are in the market. Obviously, the move downward has now occurred. The chips led the move downward, and now we're going to see what the next steps are. So we're going to take a look at the SP 500, the NASDAQ, the Russell, the VIX, the large tech stocks, crypto, the Forex market, as well as gold, silver, maybe even the Chinese and Indian markets as well. All right, so without further ado, we're going to put everything all together, and we're going to get a good holistic view of what the next steps are in the market. All right, love you guys. Let's get started with the video. First and foremost, to make things very, very simple, we're going to take a look at Apple. All right, we're going to take a look at the large tech stocks because the large tech stocks move the overall market. All right, so one at a time, this is a chart of Apple. This is clearly not a bullish setup. This is setting up for a slide down lower. This is bearish momentum. We're making newer lows. It's making lower highs as well. And usually this setup in terms of a day trade leads to a pullback. So we are really just trying to hold 230 by a hair. This is not the type of bullishness that you want to see in a dip buy. This would be a very, very aggressive and non-safe time to try to buy a dip in any stock if you're trying to day trade it on a 1 minute time frame. In my opinion, we do tend to break down lower. 230 is a major level of support. If we break below 230, then 227, 228 area is on the table here. And this would coincide with the 23.6% fib on Apple from the most recent lows to the most recent highs. Apple being bearish or showing weakness is not a good sign for the overall market, obviously. So, with that being said, for us to really become bullish again on Apple, we need a break back above 233, in my opinion, on Apple. This is a daily time frame of Tesla. Tesla is another very, very important stock to monitor. With Tesla doing this, this is not what we want to see, okay? We broke below 230. This was trying to set up for a bounce. Intraday, we got a bit of a bounce. We broke above 340. We were trying to hold above 340 intraday. But right at that moment, it basically, 340 was major resistance. People sold off. And now we are back below yesterday's low, which is clear cut. This is not bullish, right? So generally, for this to continue downward, we essentially need to remain below 333 on Tesla. Generally, this is a bearish sort of pattern. This is a bear flag. Bear flags are generally bearish patterns. This is not a bullish setup. Tesla, what we're seeing right now on Tesla is not a bullish setup, in my opinion. And this is not good. This is not good for bulls. Because if 333 cannot be reclaimed on Tesla, we are most likely going to see 320 to 324. Now, Tesla, this is really, really ugly sort of setup. And the only way that we really will get a bounce is this is not even a technical setup that you would want to go long on. The only chance to get a bounce is extreme buying pressure. If you guys understand, looking at the time frame when you're day trading, looking at smaller time frames, if you get a random monstrous bullish candle or monstrous bullish move that is technically not even really supposed to happen, that's genuinely the only thing that could stop Tesla from being bearish. And that is a reason why you don't want to try to go long into this weakness. You would rather just let it tumble, come back down to levels of support, or wait for a break back above levels of resistance. That's currently what's going on with Tesla. Not looking great. So Microsoft, I was mentioning how when we broke down below on Microsoft, and as we took so long, and as we were stagnating at this level of support for so long on Microsoft here, the longer it takes for us to bounce at a level of support, the higher the likelihood probability it would take us basically falling lower. So essentially, that's exactly what ended up happening. We took a very long time to bounce. We didn't end up bouncing, and instead, momentum shifted lower. We saw this across the board on crypto as well. We saw this on Microsoft. We saw this on today. We saw this on the large tech stocks, chips, as well as the S&P and the NASDAQ. So all of this has been a precursor. This is why looking at these large tech stocks and crypto is so important, because the market makers across the board are similar. If Microsoft was doing this and the S&P and the NASDAQ were showing the early onsets of this pattern, if Microsoft ended up falling lower, if Bitcoin ended up falling lower, chances are the S&P 500 and the NASDAQ would also end up falling lower. Does that make sense? This is why looking at what these other stocks and cryptos are doing is necessary, because you have to look at everything all in one. You can't just look at a chart of the S&P 500 to see, oh, wow, okay, the S&P 500 should be holding the support. No, you contextualize it with as much data points as possible. And the more data points that you look at, the higher the probability chance that you will choose the right direction. So Microsoft, we got a nice follow through to the downside. We broke this uptrend. This continued to break down lower. And now 510 is a major level of support here on Microsoft. If this breaks, then we're just going to tumble back down to around 503. And this zone here is essentially where I think Microsoft should be getting a bit of a bottom. Anything lower than this, then it's going to be pretty... Obviously, you have the major $500 psychological level. But this is where I think people are going to want to try to find a bottom. So I would not be surprised to see some sort of a small bounce. Maybe if we can try to reclaim 513 on Microsoft again, it would give bulls some sort of vigor for a move higher. But this zone is essentially where I think people are going to try to start taking profits on their puts, and where a bounce would essentially occur on Microsoft. Keep that in mind. Be careful. In general, in my opinion, now is really not the time to be that aggressive to the long side. Let the momentum shift and even itself out to the downside first. So Amazon also drifted lower. It's holding above 228. We were bullish on Amazon down here at around 215. We got a massive spike to the upside, hit our target to the upside as well. And now Amazon is still holding our prior level of support at 227. The main target for Amazon to the downside is going to be this gap here. Amazon has a gap to fill at 226.22. Right now we're at 228. So about $2 lower, that is where a major level of support still lies on Amazon. And essentially, the main level that we need to break back above on Amazon is 230. Very simple. Nothing too crazy on Amazon. Awesome sort of, strength overall in the past few months. But of course, as the market is tumbling, as the overall tech stocks are tumbling, getting a bit of a pullback on Amazon is obvious, because all of the stocks essentially move together. Google is actually holding abnormally well. It's doing very, very well. It doesn't look like it has that much more room to the downside. Google is actually set up much better than a lot of these other large tech stocks. It barely had a red day, barely dropped 1% today. Looks pretty good. We have major support at 200. Doesn't look that bad, honestly. Google is holding pretty tidily. So 200 needs to hold on Google. If 200 breaks, then yeah, things can get really, really aggressive to the downside. But 200, major level of support. The major level that needs to break back above for strength is 204.50. And that's essentially what we're looking at on Google here. Netflix, I was mentioning how the 50% fib right here, this zone, the 50% fib to the 618% fib. My mouse is starting to act up. This 50% to the 618% fib was going to be where people start taking profits on their longs. What do I mean by that? Essentially, all of the people that bought the dips here into the weakness on Netflix, I was saying this zone is where people that went long down here are going to start taking profit and selling their positions up here. That's exactly what ended up happening. Netflix We barely broke above the 50% fib and about faced. Got smacked to the downside, and we bounced exactly off of the 23.6% fib. Sometimes these algorithms work really, really well because it's just the way that the market moves, the ebbs and flows of the market. So that's essentially what's going on. Netflix now needs to reclaim back above the 38.2% fib, and this is just not a really bullish candle. This is not a really bullish situation, obviously. We need a break back above 1230-ish for really, really reclaim of the bullish momentum. But overall, this is either going to lead to some chop or to a pullback lower, essentially, on Netflix. And this, once again, a situation like this, a large red candle, you can't lie to yourself and say, wow, this is a great buying opportunity. This is long term. Of course, all of these are great buying opportunities. I think the market in general over the next couple of months, year, is going to be a great buy, right? But this specific setup over the next few days, you have to be blind to think that this is a bullish setup. This is not really a bullish setup. And this is the precursors of a continued move lower or chop. This is not bullish. All right, so that's that for Netflix. Meta, we were looking at Meta as well. Meta was another name that we were failing to break above highs. Showed wicks on these candles to the upside. We didn't get a pull. We didn't get a bounce. We tried to hold these levels of support, but once again, what was I saying? The longer it takes for us to bounce, the higher the likelihood chance that we pull back lower. And we ended up gapping down yesterday, and today we got another move lower. So the main level of support now on Meta is this prior low here at 745. Below this, we have an entire gap to fill back down to 708.50. And then we have we have this entire gap to basically fill on Meta. There's a lot of room to the downside. This is not a bullish setup. This is clearly showing bearish momentum as well. So far, we've seen a lot of these large tech stocks show a lot of bearish momentum. Now we're going to take a look at the main losers. The main losers, which are the chips. This is the reason why I was extremely, extremely worried about being long on the market. So this is a chart of NVIDIA, right? And before we continue on, so in my Discord server, we've been on a massive, massive tear. Every single trade, I share exactly when I'm entering and when I'm exiting. As you can see, we are 38 for 3. This is a massive, ridiculously disgusting success rate. Every single time I enter and exit any single trade, any sort of loss, I post everything. I am completely transparent with everything that I'm doing. If you guys want access to my trades, to my trading view indicator, to my thought process and analysis throughout the day, the direction that I think the market should be going daily, the link to join is down below. The proof is in the pudding. I am very, very good at determining which direction the market should be going. And this success rate of mine is indicative of this. You cannot fake these results. This is not gambling. This is not luck. This is hours and hours of consistent work that has now permeated into amazing results. So if you guys want access to the community, you guys want to join, click the link down below, click the link in my bio, and I would love to have you guys there. Let's get started with the rest of the video, all right? NVIDIA and AMD, I was trying to tell you guys, these were not bullish setups. These were not bullish setups on the chips. As we can see, this was clear-cut failure to break into new highs. Failure to break into new highs. Teetering at a level of support on AMD. We were teetering at 175, 176. Do you want to go long into weakness at a level of support hoping that it bounces? Never. You never, ever want to do that. Number one, because clearly you don't want to try to buy the dip and catch a falling knife. That's number one. You never want to try to catch a falling knife at the top. At the top. You might want to try to catch a falling knife after like a huge drop lower. But this is just the beginning. This was just the beginning of a move lower. That's number one. Number two, when all of the other large tech stocks were showing weakness, you have to assume that the weakness was going to permeate into these chips as well and into the other large tech stocks as they did, right? So that's what basically happened with AMD, man. We got a massive gap down, a massive drop to the downside. This was not the sort of setup that you wanted to go long on yesterday. And today, clear as day, I was saying that we would see I was mentioning yesterday that we would see the low 170s even break 170 on AMD and on NVIDIA, right? So we broke 170. We're in the mid 160s now. So the next major level of support on AMD, again, still, this is not a bullish setup. I would not want to try to go long here until we break above 170, 172, really. If we could break above 172, then sure, we can have like a nice stop loss in the 168 area and a continued move higher. But right now, there's still more room to go to the downside. And the next major level of support is 164. That's that on AMD. The momentum is still very, very bearish. We could get a small bounce, but that's not what you're really counting on, right? You shouldn't really be counting on that. And for NVIDIA, I was mentioning how yesterday NVIDIA needed to break above 183. But the main issue with NVIDIA posting this green candle here was that AMD was showing weakness, was that the other large tech stocks were showing weakness. So this, I said this could be a bull trap, and that's exactly what it was. This ended up being a bull trap, and we failed to break above 183. Clear-cut resistance. I told you, 183, if we reclaim that, then sure, we could end up being bullish, and this entire ugly, bearish situation on NVIDIA would not be relevant, okay? Clearly, we couldn't break above 183. So that's why every major level of support here was just broken, and we ended up closing on the lows. We ended up closing on the lows today, guys. This is very, very bearish. Clear as day, very bearish momentum. As long as we essentially hold below 177, 178 on NVIDIA, maybe even 178, 179-ish area, this is still bearish, and we can continue falling lower. Be very careful about trying to catch a bottom. And once again, similar to AMD, NVIDIA has support a little close, right? We have support around 173, 174-ish area, but there's still more room to go. It's still bearish, and we need to reclaim back above 178, 179-ish area for a continued bullish move. But right now, clear as day, this was bearish on both of these chips. Things were setting up bearish on all of these large tech stocks. And it was just clear as day, very, very simple, understandable trading. You have to contextualize everything step by step to really get a good view of where the market wants to go. And that's what we did. Very, very simple, guys. Don't even overthink it. If the majority of the large tech stocks are at levels of resistance or they're showing weakness, assume the market is also going to be weak. That's it. Very simple. That's what we did. I literally, in the past few days, we walked by every single thing, and that's exactly what ended up happening. The VIX, guys, you already know. We have to look at the VIX because it has an inverse relationship to the market. If the VIX is going to be rising, that means the market should be falling. And as you can see, the VIX was sitting at very, very major support. We were holding the $14 to $15 area. We created a falling wedge here. Oh, artist. We created a falling wedge. Falling wedges are extremely bullish patterns. We made a falling wedge into a level of support. This basically sets you up for a bullish move. That's exactly what ended up happening. We got a pop in the VIX. As the VIX rose, the market fell. So once again, you have to look at all of these different factors all at the same time. The tech stocks, the indices, Bitcoin, crypto, as well as the VIX to see which direction the market is going to go, what the highest probability direction is going to be. And that's essentially what we needed to do. So now the next level of resistance is clearly this 20 exponential moving average on the VIX, as you can see, which is the Bollinger Band level. We needed a solid close above that. But for now, this is pretty bullish on the VIX. If the VIX can hold above 1510, 1520 area, then we can break above this 20 EMA. And then $17 is going to be the main big kahuna level on the VIX to the upside. And that is going to, if we end up jumping up to 17, the overall market is going to tumble pretty aggressively. So I don't know how fast we're going to bounce on the VIX. I'm not really sure how much further the market has to go. But currently, right, a lot of these large tech stocks are showing weakness, and the VIX is showing strength. So for now, we're just going to take it one day at a time. We don't know how much more room and how much more momentum there is to the downside. All right, so for now, those are the levels on the VIX. All right, so this is a chart of the ES futures. As you can see, we were teetering at this trend line here. I was mentioning that this trend line was very, very important. This was essentially the uptrend line from the rising wedge. Spectacular, right? This ended up breaking. Okay, so I was basically telling you guys yesterday that this was not the setup that I would want to go long in terms of a day trade, because this is showing weakness. We're at a top. We had multiple days where we tried to break above new highs, and we failed. So this was the candle. When you see a candle like this with a wick to the top at highs with a disgusting sort of bull flag sort of situation here that we were basically looking at, it's not sustainable. This was not a sustainable move. And clearly you could see that this was just asking for a bearish continuation. We could not hold this trend line as soon as today. As soon as we broke below the trend line, it was just basically off to the races for the bears. I was mentioning that overall, the past 2 days, the market needed to get a monster bullish move. If not, we were going to drop. That's exactly what ended up happening. We broke below the 23.6% fib on the futures here. And now the target to the downside is the 38.2% fib at 6,400 on the ES. There's a bit more room to go to the downside on the ES. And it just clear as day. Clear as day. You don't want to be bullish when you have to basically hope and pray that bulls are going to step in. In terms of a day trade, I was mentioning specifically, now was not the time to enter long. I was saying I would rather be short if I was going to be taking a day trade. So this is a chart of the SPY. This really, really drives it home. So essentially, what we're looking at is a couple of days ago, we had a monster move to the upside right here where we opened and closed outside of the upper level of the Bollinger Band. That in and of itself shows extreme overextension. What ended up happening the next 2 days? We broke lower. We broke lower. And then on this candle, that big red candle, we couldn't continue up. We gapped up. We couldn't continue. And 646 was the ceiling for this move. So what ended up happening? When we're creating a tight level of range, right? And we gap up and fail multiple times at a level of resistance, chances are this sort of range that we're creating is not going to sustain itself. Number one, because we looked at Microsoft, we looked at crypto, we looked at all of these other stocks that were basically making this exact same pattern, and it led to a monster move lower. You cannot expect situations like this to hold and for us to bounce aggressively. I was trying to be fair. I was saying, look, we needed to break above 644 and we need to close above 643, 644 for us to just nullify this and for us to continue. That did not happen. And I gave you guys the time constraint on this move to the upside as well. I said we needed a move to the upside within 2 days. That also did not happen. So instead, we're back. We retested the 22.6% fib. As you can see, this closed almost perfectly on the dot here. This is still not a bullish situation. But what we do want to see is a break back above 642, 643 on the SPY. But currently, this is not a bullish situation. And in general, we do tend to get a continued bearish move. the only way, once again, for us to bounce off of this level is just a miracle. We need a miracle from bulls for us to bounce. And we do not trade based off of miracles. This is clear-cut bearishness, follow through to the downside, and now we're just going to wait to see if we can get a bit of a pullback for a, dip buying opportunity. This is a daily time frame of the NASDAQ futures. Similar situation. We were weak. This was, look what we were doing. Bearish, small, baby little candles. We created a falling wedge, right? Lower lows, lower highs, just not as bullish of a situation that we want with bearish momentum. We opened and closed outside of the upper level of the Bollinger Band. We could not sustain it. We ended up falling lower, then another move lower, then another move lower. And today, this is where we really needed to hold. This 23,700 level on the NASDAQ. Once that level gave and once it caved, we saw a massive move lower. We ended up capturing a big chunk of that move lower. We captured a lot of moves lower. It was a really, really good trading day. We remained bearish. It was a spectacular day in overall. And as you can see now, the NASDAQ came back and retested the 50% fib, almost to the dot at 23,480. Okay? So, clearly, this is still bearish. 23,600 is the fib level to the upside. Unless we could break back above that, we are still showing some bearishness. We should still be falling lower, in my opinion. And this is the daily time frame of the QQQ. This is an even better picture to look at. Like, you could clearly see that we gapped up, opened and closed outside of the upper level of the Bollinger Band. Great, right? We failed. You could see we could not even break back above 580 here on the QQQ. 580 was a ceiling. It failed to break above 580, and we just continued drifting lower. Yesterday's candle was the make or break. We needed to start showing some bullishness. But I told you guys, because Microsoft and crypto and all of these other tech stocks that we looked at were starting to break down lower, the SPY and the NASDAQ would also end up breaking lower. And that's exactly what ended up happening. I told you guys I would not want to try to go long. Instead, if I was day trading, I would look for shorts. That's exactly what ended up happening, guys. So now today, moving forward, right? We broke into the 560s. 574, 575 needs to be reclaimed for a move higher. If not, then this is just going to continue falling. We're going to continue dropping. And, this is not a bullish setup. We broke a falling wedge. And this is generally, it continues lower. So the SPY, the NASDAQ, a lot of these tech stocks, they are all showing a bit more room to the downside. I'm not saying we can't get a small bounce. But overall, the overarching momentum is bearish. And for anyone to say that it's not, it's just clear as day. This is not a bullish setup. If you're looking at it on a 1 minute time frame, you're day trading, trying to go long here, your gut is telling you it wants to continue lower. So, it might work to the upside, but it's not a sustainable good trade to take, in my opinion. So that's that for the NASDAQ. Let's go ahead and take a look at the Russell. So this is a chart of the IWM, the Russell 2000, and it's also very important to monitor because the movement on the IWM causes movement in the SP 500. So clearly, we are still trying to hold this level of support, whereas the SPY and the NASDAQ broke down lower. The Russell is trying to hold for dear life at 226. Once again, is this the time where you want to start going long? In my opinion, no. Could we bounce? Sure. We could do whatever we want. But in terms of a trade, it's not a high quality setup, in my opinion, to try to go long on this setup. I could be wrong. We could end up bouncing. But I would rather try to be bullish again if we break above 228 to 229 area. If we break above this area here, then it's way more safe to be long. But down here, the momentum is still ripe and it's still bearish. You could still see clear-cut bearishness. There's room to go to the downside. So I would rather just wait. We still have room to go to 223, 222. The risk reward is still there, in my opinion, for bears. And just the fact that a lot of these large tech stocks, just the VIX has room to the upside. Lots of factors are still showing some bearishness to the downside, in my opinion. All right, so I hope you guys enjoyed this part of the video. Next, let's go ahead and take a look at crypto, gold, and some other stuff. Let's start off with crypto. What chart does this look like? What does this look like, guys? The chart of Bitcoin right now, what does it look like? It looks exactly like Microsoft. It looks almost identical to what Microsoft ended up doing. We were consolidating on Microsoft, and we broke down lower for 2 days in a row. We were consolidating on Bitcoin, and we broke down lower 2 days in a row. This is exactly why you need to monitor all of these different tickers all at the same time. And that's why I make these videos in the way that I do, so that you guys can see everything in a total view, okay? So clearly, yesterday, I was saying that when Bitcoin has a massive wick like this, it tends to get filled. I didn't know how long it would take to get filled, but we ended up filling it, and we ended up making another low. So this is really beautiful price action that we're seeing right now on Bitcoin. If it remains below 115, then basically we have major support here at 112. Okay, if it remains below 115 and we break below 112, if we can get a dip down here on Bitcoin at around 108 to 110, that would be very exciting for me, in my opinion. I would be very happy. I would personally be very happy if we could get a dip down here. Just the thought of it is actually making me very excited, because on a longer enough horizon, getting these dips in crypto is so important, and it's just a blessing. It's a give me. So you could easily get into some long-term calls on IBIT, trading Bitcoin options down here, and this would be amazing. I would be so happy. But the main first level of support is 112. You know, hopefully that breaks and we get into 108, 110 territory, so we can get into cheaper Bitcoin. But clearly, the tech stocks, Bitcoin, these things move in unison. Solana, another major mover in the crypto market. We were consolidating here. Solana was actually showing more strength than Bitcoin relatively, right? Then we had the downside move. So we have major support on Solana at 172. Solana is not doing as bad as I thought it would, right? It's still holding 170. It's still holding around 175, right? If 175 breaks, we could see 172. But in general, we have massive support here on Solana around 168 to 170. This is going to essentially be how much percentage lower? About another 5% lower max before things should bounce. And that's just my opinion. But overall, this is not a bullish setup. I was mentioning this was not a bullish setup. I would be looking to buy dips. This is not a bullish setup. I wasn't expecting strength. And, you know, this is just a follow through to the downside. Nice and simple. Very happy. So I would love to get some dips down here closer to 170 on Solana. The only way we really start showing some sort of bullishness is if a miracle occurs. But you can't really trade based off of miracles. The momentum is still clearly bearish, and we should just let the momentum play out and try to buy closer to the lows into a support. But right now, on this daily candle, right now, this is not where I would try to go long. The momentum is still bearish, and we should be falling lower, in my opinion, on Solana. Ethereum. What does Ethereum look like? Ethereum also looks exactly like Microsoft's chart. We had a consolidation, multiple days of consolidation on Microsoft. Failure to hold, and a massive move lower. Ethereum, same situation. Days of consolidation, failure to hold, and a massive move lower. Ethereum was also skyrocketing. Microsoft was also skyrocketing. The skyrocketing momentum failed. This was the setup that essentially occurred, and now we're in downside move territory. Same concept as Bitcoin, same concept. So now essentially we need to see if this 4,300, 4,250 level can be reclaimed on Ethereum. This is essentially where bears are going to have to make a decision. if they want to reclaim and continue to short it. But right now, still showing some bearishness. We have major support down here closer to 38,900 on Ethereum. And that would be a juicy 7-8% drop. I don't know if that's going to end up happening, but the momentum is still clearly bearish on Ethereum. This is not a point where I would want to go long, in my opinion. Sure, we can go long here, and it could bounce, by all means. But I have a 93% success rate, over a 90% success rate. This is not a long opportunity that I would take. I would rather wait for a pullback down here. I would just be patient. The momentum is bearish. There's no reason to try to force a long opportunity, because once things get lower, we can comfortably enter into a really nice leap position into Ethereum index with options. So that's going to be really fun to see if that occurs. But overall, I'm very, very bullish on crypto. I'm very, very bullish long-term on crypto. Okay? Please do not get that twisted. I really would hope that, crypto does drop a bit lower so we could buy the dip. But overall, guys, we could look at the Forex market. Not really much going on. So this is the Euro USD. Once again, not really much going on. We're holding this major support at 116.30. It's trying to hold this level of support. This is not the most bullish setup, but overall, very, very bullish on the euro. And same concept on the pound. Both of these, it's not the most bullish setup, but we're holding support. So both of these main Forex tickers, they're not doing too hot, okay? Gold is also not doing too hot. I was showing yesterday that gold was really showing a downward move potentially. We were looking to make new lows. 33.30 was holding as resistance. This is just an ugly setup. Massive red candle, consolidation at a level of support, follow through to the downside. What does it look like? Microsoft, crypto, the S&P, the NASDAQ, all of these things move in unison, and they have the same sort of patterns. All right, so there's that for gold. Silver does a really good job as well. I painted this picture on silver yesterday. This is a bear flag into a major Fibonacci level of resistance here. What ended up happening? Move lower. So now we're trading below the 38.2% fib on silver, below 37.48. We have room to the downside to the 23.6% fib, a bit lower as well. Easy money. All of these things move in unison, guys. So really just try to understand this. It's very, very important to monitor all of these things all at once. And for now, we've been playing the market very, very well. So I hope you guys really genuinely enjoy these videos. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys tomorrow in the Discord. Have an amazing day. Thank you. Take care.